All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic as always, because in today's video, what we're going to be doing is we're going to be talking about a weekly dividend strategy. And this is not any weekly dividend strategy. It's not like buying Coca-Cola or buying PepsiCo. It is about buying monthly paying dividend stocks, which are high yielding, such as QQQY, TSLY, and also KLIP, which are going to pay you on different weeks in a certain month, and you can use that to then compound your returns, as they're paying pretty high dividends at 67%, 50%, and also roughly 50%. I think KLIP is somewhere down here. Yeah, currently about 50%. So if that does sound good to you guys, please do stick around till the end of this video. I want to go through kind of each fund, when they're paying, and how you can use this strategy. I also have the dividend compound interest calculator out and my own personal calculator, so we can calculate a lot to do with these dividends and how they're going to pay. So if that sounds good, please do stick around. We're up to 2,805 subscribers. We actually just passed over this milestone right here, the 2,800 subscriber marker. So thank you to everyone who subscribed and joined our channel. I know, guys, oh my god, I haven't made a video in like 3 days. I've been pretty busy in terms of school, sports, and everything like that, but I still had time, and I actually this morning went through and made it my mission to respond to all of our comments. We had 69 comments this week, so that's awesome, absolutely fantastic. As you can see, 30 on the last video. Thank you to all your support, and as well all your future ideas. You guys definitely gave me some great ideas, so I'll make videos on that in the future. But today we're talking about a couple different covered call strategy ETFs, some being synthetic and some not. This strategy is basically taking 3 covered call paying, dividend paying ETFs, which are QQQY. You can use any of the Yieldmax ones. I personally choose to invest in TSLY, and then also using KLIP as well. And what I've done is, you can see I have a lot of tabs up here. I have their stock prices, their charts, and their history. So we're going to go over that, starting with QQQY. So for those of you that don't know what QQQY is, it is the Nasdaq 100 Enhanced Option Income ETF. It's recently kind of like introduced to the market, and it aims to achieve a consistent and outsized monthly yield distribution for investors, coupled with the equity market exposure to the Nasdaq 100. So it writes calls on the Nasdaq 100, as you can see right here. And I really like this new ETF. They are a 0 DTE. I don't know what that is. JK, you guys reminded me in the comments. Thank you very much. 0 DTE is zero date to expiry, meaning they write and sell options and collect option premiums on a daily basis. They're shooting for about 0.25 to 1% on these option premiums daily. And so that helps them to achieve this pretty massive 67% dividend. The funds like TSLY and like KLIP, I'm pretty sure, I know TSLY, I'm not sure about KLIP, but I'm pretty sure they both go on a weekly option premium basis, collecting them only on the weekly, but QQQY does it on the daily. And so this could potentially offer a little bit of better capital appreciation, but also a higher dividend yield as well. So one thing I would like to say for this fund, the Nasdaq 100 index, I actually really like it. It does appreciate well over time, and I do think that although the stock is very new, it's already seeing some signs of some decent growth, like in terms of, you know, just little appreciation day by day, which I like to see so far. I don't know if that's just because it's new or not, but I like the underlying assets. So that is kind of my insights on that. Next, we have the Yieldmax. So just kind of covering here, QQQY is going to be paying on October 5th, and it should be paying roughly in the first week of every single month going forward. Yieldmax, we actually skip a week here. This payment right here is by Medical Properties Trust. This is a quarterly paying dividend. TSLA and the Yieldmax funds, they'll either pay on the 2nd or the 3rd week of the month. Unfortunately, they pay on the 3rd week of the month, so we don't get that dividend very early. But as you can see here, they are still a pretty massive paying dividend stock at 50%. Most of you guys probably know what TSLY is. It is the Yieldmax Tesla Option Income Strategy ETF. They don't own any underlying asset, which is Tesla. They currently just look for they seek to generate monthly income by selling/writing call options on Tesla, but they are synthetic because they don't own any Tesla. They just look to kind of mimic the stock price of TSLA by using short and long calls. Now, they did have a pretty massive drop in their previous distribution, which, you know, equates to this 50% dividend, More so, they'd be sitting closer to the Defiance ETF QQQY at about 70%, but they did take that hit, and so they are sitting at about 50% for this month. And over the past little while, Yieldmax has taken a pretty big hit to the downside. Going over the past 6 months, it was up to $18.11. I think it was even a bit higher than that, up to $18.30. But now you can see it's down to $13.13, which is close to the previous 6-month low. And you know what? I might make a video on TSLY and when the best opportunities to buy are, because I was buying up at these $18 levels. I'm down on those current positions, but when I bought back here at these $13 levels, I'm way up on those positions, even though the current stock price is at the exact same marker. It's because I've been receiving all of these dividend payments from previous months. So this is the second dividend that we have in our weekly dividend strategy right here. It's going to be TSLY, and the last one coming in at the 29th is KLIP. And KLIP is actually my biggest dividend payer. For those of you that don't know what KLIP is a Kraneshares China Internet and Covered Call Strategy ETF, currently paying a dividend of about 50%. Like, one thing I do want to bring to mind, I don't want to hide anything from you guys. Look at the stock price appreciation of KLIP. It's pretty much straight down. And you know what you might be saying? You might be looking at it like, damn, like this is like a stock you don't want to invest in because it just goes straight down from $21 all the way down to $17. But keep in mind, KLIP has also been paying these pretty massive dividends over the last little while. Let me see if I could find their distributions right down here. They've been paying huge dividends going back to 83 cents, 86 cents, 83 cents, 83 cents. They did a lot at 83 cents. They had a little bit of a dividend drop right here at 74 cents, but really you don't think about it as a dividend cut because these are just distributions collected from option premiums. And so some months are going to be a little bit less, some months may be a little bit more, depending on the volatility in the underlying stock, which for KLIP is KWEB, as you can see right here. So KLIP seeks to provide current income by following a cover call or buy rate strategy. KLIP buys shares of KWEB, which is the Kraneshares CSI China Internet ETF, and writes or sells corresponding call options on KWEB. So whatever KWEB does is what KLIP is going to do. KWEB is a Chinese internet sector, and it's been relatively flat, but due to the fact that KLIP has been paying out these massive dividends, their share price is looking like it's declining, but it's really paying that back in dividends. And just to kind of show you a little bit of an overview of how these funds have performed so far in my portfolio, what I want to do here is go into my portfolio and I'll show you the real raw returns of how they've been performing. So QQQY is right here. I'm down 4.7%, but they just paid out. They didn't pay out yet, but they are going to pay out on October 5th. Their stock price is down to $18.71. I bought it at $19.64, but they paid a $1.10 dividend, so I'm a little up on that right now. TSLY right here, the stock price is $13.85. My average share price is $15.30, so I'm down 9%, but I've definitely received more than this $113 capital gains loss in dividends. I've probably received about $200 in dividends so far, so I'm up a little bit on this position right now. And KLIP, exact same thing. Although I'm down 10%, I've been holding KLIP for a very long time. I have a lot of money invested. My average share price is $19.41. It's down to $17.21, which is roughly $2 less. And I've definitely received more than $190 in dividends just due to the fact that KLIP has been paying me for a little while now. And I'm making almost $70 every single month from KLIP paying these dividends. So with that being said, I hope you guys kind of did enjoy this video. I hope it brought a new strategy to you guys, how you could use QQQY, TSLY, and KLIP. You don't have to use TSLY. You could use any of these Yieldmax funds, but I personally choose to use TSLY. Maybe I might switch. I'm not sure currently. I'm going to hold on to TSLY. I know it might not be the best for this strategy just due to the fact that Tesla does have some pretty intense price swings, and that does tend to eat at that share price and also the capital gains here. So that's something to keep in mind. But so far, I'm collecting the dividends from the strategy. As you can see, I'm making about $156 in October for this month. I'd like to get that up to $170. That's my current goal. And each of these funds are going to pay me a lot more in the future, which I really, really like. QQQY, I'm definitely going to try to upgrade this position past that $11 marker and get some more shares of that in the future. But that's just a little kind of quick update on that. So I hope you guys did enjoy this video. I know we didn't use the compound interest calculator. All I could really show you here is if we put in 10 grand, our monthly contribution being about, we'll put it at $150 because that's what we're making back in dividends. Our estimated interest rate of about 50% every single year. I know that's kind of inflated, but I should probably put in time and length for years of that. We'll put in 20 years. You're going to see some pretty insane returns while investing. Obviously, not that much money. $46,000 for $46,000 to 46 million, pretty much 45 million. That is a little crazy. That's obviously blown way out of proportion because we got to take in the capital gains loss of these stocks. But as you can see, investing in high yielding investments over time, it's going to return you a better investment than it would have if you just sat your money in cash. That is what we hope for. Obviously, there's nothing guaranteed with dividend investing and investing in general. I just wanted to bring these funds to you guys because I know you guys like the high dividend funds and any kind of new strategies that come about it. So I hope you guys did enjoy this video. I hope you guys do subscribe if you're interested in any more kind of like high dividend yielding funds, strategies, ETFs. I'll do my best to keep on top of these Defiance ETFs because I know they might be coming out with some more in the future. So please do subscribe if you haven't yet done so. Make a comment, guys. Look at this. I'm responding to all the comments. And you know what? I'm ready for anything you guys throw at me. So thank you to everyone who's commenting. Jamie, David, Info Ranker, Aline, Morris, anyone who comments, thank you guys. I appreciate you all. I hope you guys enjoyed this video. And you know what? Enjoy your, what day is it? Enjoy your Tuesday today. And I will see you guys in the next video.